I'll be going through with you our IRBT stock, and you can just type in Google and click enter, and you'll get this information. The name of the stock is iRobot Corporation, and you can see the symbol IRBT in Nasdaq. If I want to buy right now, I have to pay 69.85 US dollars on 5th of August, and I can see the market cap is in billions, which means it's a big size firm. It doesn't pay any dividend. Companies that pay dividend, that means that they are financially very strong, because after paying their creditors, loans, liabilities, costs, they still have extra money. That extra money it pays to shareholders as dividends. So any company, if they're paying dividend yield, that means they're financially very strong. This firm is not paying a dividend. There could be two reasons. Maybe they're not financially strong, or maybe they have extra money after paying their loans and costs, but they decide to instead of paying to shareholders, they decide to invest in their own firm. So invest that extra money in their own firm to further expand their firm. So there could be many reasons for that. So you need to find out that. Now let's look at when was this founded. In 1990. You can also go to Wikipedia and search this box, and you can see founded 1990, 29 years ago. Now I want to see what the employees think about this firm. I'll copy this exactly from Google, right? Copy this, paste it here, click type Indeed reviews, and I want to see that what employees have to say. There are 24 reviews, which is not plenty to judge a firm, but still there are 24 reviews and 4 star. It is brilliant, and you can read through the pros and cons yourself, what people have to say about it, the salaries they're paying, the jobs they have listed, the question and answers. Now let's see what people have to say in Glassdoor about this firm. So we have 183 reviews from employees, and it's 4.5 star. It's brilliant, and you can read through the pros and cons yourself, and check out the jobs they have listed, the salaries they're paying, the interview questions, the benefits they're giving to their employees, and the photos of the firm. Now let's see if it has any patents. I'll go to Justia Patents, and I'll paste the company's name. And I just want to point out, please don't look at inventor, because these are people who invented but they don't have full rights. I'm only interested in applicant or assignee, because they have the full rights of the patent. I can see in 2012 they have patent, 2012, a lot of patents in 2012, then 2013. That's brilliant. The more patents a firm has, the more stronger it is, and the more difficult it is to beat this firm. So it's brilliant. It's very strong in market. And please look out for recent patents in 2015, 16, 17. That means because that means they're still innovating, which is important. So I can see 2014 patent, and it's a big list. Just go through it yourself. And 2015, that's a recent one. 2016, that's brilliant. So it's still innovating. That's brilliant. So it's very strong, and it's a big list. Just go through it yourself. Now let's go to Yahoo Finance. I want to see the key executives and their salaries. Let's click here, and don't be confused by different symbols. What I do is I just go to Google, click enter, and I just see the symbol of Nasdaq, and it says IRBT. So that's the symbol I'll go with. So what I'll do is I'll just go to IRBT, click that. Okay, go to profile, and you can see the sector, industry, and the full-time employees. And the best part is that they have 5 executives, key executives, and all of their salaries have been shown. So they haven't hidden any salary from us. So they have given us full information about the salaries, which means we have a lot of information about this firm. We can build trust with this firm. Now let's have a look in macro trend, and let's see the ratios. Go to price ratio, price book ratio, and type in the symbol IRBT, and click that. I'll just explain you briefly. If the price book ratio is less than 1, that means stock is cheap, it's at discount, and you must buy it because you're getting a sale. If it's less than 1, if it's more than 1, that means that the stock is expensive. The higher the number goes, the more expensive it gets. Please be patient with this website macro trend, because it has a lot of data, so sometimes it takes time to load the data. So be patient with it. So let's see. Please let me know if you have any questions for me, or if you want me to slow down in the videos, or if you want me to make tutorial on a particular stock that you're researching right now, I'll love to do that. Right now it's 3.39, which means somebody who buys in August 2019, they'll be paying 3.39 times more money to buy this stock. It's 3.39 times more expensive. In 2019 March, if somebody bought that time, they paid 5.87 times more money. So they paid $117 to buy something that was only $20 worth. They paid 5.8 times more money. Right now it's 3.39 times more expensive. If I just see that in 2009 March, it's 1.58 times expensive. Somebody who bought in 2009 March, they paid $7.6 to buy something that was $4.8 worth. It was still expensive, but right now it's 3.39 times expensive. So it's up to you if you want to wait for it to come down, price book ratio, or maybe you want to buy right now. It's up to you to decide. Let's go to other ratios, and I want to check the current ratio. If the current ratio is less than 1, that means stock is very risky to buy because liabilities are more than assets. If the current ratio is 1.5 or more than that, that means stock is safe and there's a lot of margin of safety, so you must buy that time. It's ideal time to buy. Let's have a look once it's loaded. Okay, so I can see that the ratio right now is 3.15. It's a lot more than 1.5, so it means it's a safe stock. It has good margin of safety. That's brilliant. Now let's look at the previous consistency as well. So I can see that I want to know that has it ever been below 1.5? So that's my question. I can see that since we have data in 2005 up till now, since recent 14 years, it's always been above 1.5. So it means it's a very safe stock. It has good margin of safety. So it's consistently safe stock because it has been consistently above 1.5. That's brilliant. Now let's have a look at debt equity ratio. In this ratio will tell me if the stock is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that for it to be brilliant. Let's have a look after it loads. Okay, right now I can see that it has a ratio less than zero point 0.5. That's brilliant. So it means it has a good margin of safety. Let's look at the previous trend. Yes, it has been less than zero point 0.5. So I can see that it hasn't taken any long-term debt since we have data since 2005, but just recently in 2019 March, it has taken debt. but it's still less than zero point 0.5, so it's a very safe stock in terms of debt equity. So it's mainly operating on equity, which is brilliant. So we are looking at zero point 0.5 or less than that, and yes, it is 0.5 or less than that consistently. So it's a brilliant stock. It's a safe stock since 2005 up till now. That's brilliant. Let's look at return on equity. I'm looking for 8% or more than that for it to be very good. Let's have a look after it loads. Okay, so I can see that it's more than 8%. That means it's a very brilliant stock because the return on equity is more than 8%. That's brilliant. Let's look at the previous trend. Has it ever been below 8%? Yes, it has been once. It has been out twice. I think it has been below 8%, but that's not plenty. Once or twice is fine, but let's look. Has it ever been like consistently less? Yes. So I can see that since 2010 up till now, since recent 9 years, it has always been 8% or more than that. That's brilliant. That's what I'm looking for.